We do believe that Bitcoin will usurp 50% of gold's role. This is digital gold. So that's roughly a $5 trillion opportunity right there. So the smallest one is remittances. We think that it will take most of the remittance market. The remittance market is a $600 billion market. We have insurance policies, high net worth individuals watching, confiscation of wealth.
Right.
And with all the turmoil in emerging markets and elsewhere, the Middle East, who knew that MBS was going to take his cousin's wealth away? So don't they wish they had some Bitcoin and private keys? So also companies allocating some of their cash or diversifying some of their cash into Bitcoin. We've seen Tesla do that, Coinbase, Square, of course, MicroStrategy,
right.
And you're going to see some countries putting Bitcoin into their treasury.
Right.
We assume only 1%. So if you look at the building blocks, and then finally institutional, how much will institutional investors account for this? Well, we assume that institutional investors will put 2.5% of their allocation to Bitcoin.
Right.
And that isn't even as big as the global digital gold opportunity. The last year has been murderous for innovation stocks. And it's because of fears of inflation and interest rates rising much higher. And that has hurt the multiples, the PE ratios, valuations of these companies. I have a point of view, or we have a point of view on inflation and interest rates, but we think this has been way overdone. And it is interesting that actually just since COVID, we've seen the correlation between Bitcoin, crypto generally, and the NASDAQ. It's increased quite dramatically. Prior to that, very little correlation.
Yeah.
But Bitcoin has outperformed many of the innovation stocks out there. I think that's a really good sign in terms of underlying demand. It is a new asset class, and it is the leader of the new asset class. And so I don't think it will be going up immediately because of a breakdown in our economic prospects. And I also think that all of the technology, I'm going to take the other side of this bet, I think the technology revolution, and it's not just blockchain technology, it's genomic sequencing, robotics, energy storage, artificial intelligence. All of them are highly deflationary, and all of them will be very destructive to the traditional world order, but they will present massive opportunities for growth. So I feel as though it's going to feel chaotic like it does now, but I do believe that we're heading into a deflationary world. And it will be very good for some companies. They will boom. You lower prices, you get more demand. But other legacy industries are going to be sitting there with stranded assets. And there's going to be, again, a lot of confusion about what's going on, as there is today. So we shall see. If you look at goods spending on non-durable and durable goods, it's falling apart, and inventories are rising rapidly. Now, it'll be interesting to see how this affects the macro number. So I think there's a bifurcation going on, which is good. Services are 2/3 of consumption, so it means we won't have a serious recession, but goods inventories building up, I think, is going to cause pricing to come down. A lot of people use Metaverse Web3 as sort of a completely new movement. It is the next generation internet, and we're very much focused on decentralized services. NFTs, to your point, Mike, first, global, private, immutable, property rights system. Property rights, if you look at Hernando de Soto's work or Thomas Sowell, property rights lift people and countries out of poverty. So the more decentralized, the more secure. the more secure the property rights. So in the traditional asset management world, the definition of asset management is going to change completely, influenced by what's going on in the NFT world. And, we won't just hold assets, we'll become power users, staking, lending, and so forth. So, and the same is true in the NFT world. So you're going to get consumption and investment converging here in a way that is going to be confusing to those of us who have grown up in the traditional world. I mean, ARK spends all its time on innovation. And in fact, in the NFT world, we actually, in partnership with Signum Growth, we have the Signum ARK gallery out there in Decentraland. So we're doing a lot of experimentation right now ourselves, and we're creating a virtual innovation center in St. Pete before the physical one is ready, and bringing artists into it, to help us bring it to life. I think the entire financial services sector is going to have some days of reckoning. I think DeFi it's exploding. You're right. It cuts the middlemen out, cuts the costs. As I mentioned, even so trading and sales, all of this is already being automated, right? And many people think on the asset management side we'll be safe. We won't be safe. We're trying to figure out how to integrate ourselves into digital wallets, which digital wallets are going to win, right? And we're also looking at this new asset class where effectively we have to not only manage the assets, but actually activate them. And that's a very different world.
This is three revolutions in one. A money revolution. This is a monetary system. That's primarily Bitcoin, to some extent Ether. And then we have the DeFi revolution, which is decentralized finance, which we think is going to threaten all of the financial industry, including asset managers, right? And then we have really the next generation internet revolution, and that's really about NFTs and property rights in the digital ecosystem. A lot of companies are embracing, especially in the fintech world. For example, Block, which used to be Square, Cash App is doing all kinds of things to enable consumers, users to own and transact in Bitcoin or save. We're seeing Robinhood really embrace crypto, realizing that its client base, the millennials, wants this. I think they were a little slow off the mark, but now they're coming on. I think the Lightning Network, which is a layer 2 solution on top of Bitcoin, is going to make it much easier and involve less friction to become involved with Bitcoin. So, a lot of our companies are trying to figure out ways to embrace the crypto revolution.
14 million out of the 19 million Bitcoin out there have not traded in more than 6 months. We've got a lot more hodlers out there, I think, than people appreciate. Yeah. One of the reasons. I've said this before, but I think it's so important. Bitcoin, yes, the populist movement, but it is also a new monetary system. It is the first global, big idea, private, meaning not oversight by a government, digital, rules-based monetary system. I think it's a profound idea, and more people around the world are beginning to appreciate it as they're seeing their currencies fall apart with the dollar strong. This hits emerging markets usually.